World are doing all right. So good to see you all. Hope everyone's staying warm. This Florida girl can definitely sympathize with those of you with the rolling blackouts. Anyone who lives in South Florida knows power outages for days on end during hurricane season is definitely a thing, and it's tough. It's tough. I always used to joke that just before a hurricane would hit, I'd have two trades that I'd make sure I'm long. One was GNRC and the other was NEE. So, we might have to look at a snowstorm long position, but GNRC is always a very interesting thing to be long. I used to find myself focusing on those longs. Let me pull up that stock. I used to focus on those between April and November. That's just before hurricane season and the end of hurricane season here in Florida. Well, actually, anywhere that has hurricanes. Florida doesn't seem to get hit by them as much as other parts of the eastern seaboard anymore. But anyway, GNRC is a really interesting stock to typically be long, and I've continued to focus on this one. It's definitely one of those names that, especially during hurricane season, I'm always in. All right, so good to see everybody. Happy Tuesday again. Hopefully everyone's staying safe and warm. My sister's in Dallas. I was texting with her most of yesterday, asking her how's everything's going, but luckily, knock on wood, she never lost any power. So, all right, so let's get to it. As always, type in your questions, whatever questions you might have. We'll go ahead and tackle those. If you're in the options or the futures room, gang, just a quick heads up, we will have a shift in the schedules to accommodate those folks who do not have power in Austin. That's where the mothership HQ is at. So heads up for those of you that are in those rooms. And I will see you in the futures room and the options room today at 3 p.m. Eastern. So I'll be there for the close. And my sector secrets folks, I'll be hanging out mostly with you guys throughout the day. So I'll be seeing you guys probably just after the open. Probably after the clearing around 10:30. All right. Okay. So let's get to it. Hey there, James. How are you? All right. Good morning. We are set to open up and hit a few of our targets this morning. We have. Absolutely. So, I love hitting targets, but I've been working on a pretty substantial watch list over the long weekend. So we'll be going over a lot of those and start to gear up for our next trades. I spent the weekend going over the day trading class and now have the sub-market. Are they similar? So the day trading class, James, is my 1 minute time frame approach to trading the first 2 hours of the day, because that's all I do for day trading. First 2 hours of the day, and I focus on short-term time frames. And that one is where correlation is really important. Can I day trade the NASDAQ, the XLK, Apple, Microsoft, looking at those 1 minute time frames? Absolutely. That's something that I focus on. All right. So then next, what I want to do is focus on just the very small, it's 2 hour window every day. So sub-market, now that's day trading. It's about time and the strategies that I use. But sub-market, we talk about sub-market here in the room quite a bit, and that's the volume that I use to determine the importance of certain levels, using volume weighted average price, volume profile, and then a tool that I created for myself back in 2008 called the V-score, which is a standard deviation study of volume weighted average price. So all my stuff overlaps. Right? All my stuff overlaps because I don't reinvent my trading per se. There'll be slightly different strategies, but I'm using the same tool. So it's really more like a stacking of what I use. Thanks for the question there, James. I appreciate it. All right. Next up. Good morning, Stephen. Here's a chart I may like. FUTU. On a pullback, yeah, perhaps. On a pullback, perhaps. That could be an interesting one. I concur. It's got to pull back quite a bit, but it could be an interesting one off the 8 aggressively, to your point, my friend. So a little parabolic, so it's not a vanilla uptrend. It's definitely one that's caffeinated, right? It's definitely not a decaf uptrend. It's a caffeinated uptrend. So, but could be very interesting. I'm with you there. we'll keep an eye on it. All right, next up is hi Raghee. Hey Didier, we are nearing psychological levels on both the NASDAQ and the SPY. All right, let's jump on over there. For 14,000 and 4,000 respectively, right? Are you expecting a correction from there or going with the, I'm never going to, so I appreciate the question very much. So what the question really is am I going to pick a top? No way, my friend. No, there's nothing to, so am I expecting a correction? If I'm expecting one, then let's put it this way. A person is smart, but people are dumb. So if I have personally a level that I think could be exhaustive, if I don't hear that being talked about broadly, then maybe I've got a shot. But if we talk right now, the market's getting so ridiculously, I hear you, it's frothy as heck, but everyone's talking about the chance of a pullback. And if we're talking about a pullback, my friends, it's not going to happen. Right? It's when we stop talking about it. So I love the idea of protecting yourself. So the big question here is, Rog, how do I protect myself if the market pulls back? I'm not going to try to pick a top because anyone who's done that has been, and rightfully so, completely steamrolled, right? That's an ego trade. I'll wait for a pullback. I hope we get one. And I'll be a buyer as long as my grab candles are printing green and as long as the Federal Reserve is still, keeping this. Look, I see my shirt here today. The game stonk. Look, we're trading stonks right now. What do we call them? Stonks. I agree. They're ridiculous at the levels they're at, but you can't argue with stonks. You can't argue with the Federal Reserve. You can't argue with the sentiment right now. You can't argue with the fact that there is nowhere else for yield and alpha. The market is being sort of corralled into the equities markets. I mean, where else are you going to go? There's no real carry trade anymore in as far as a percentage chasm between currencies, bonds, gold. It's got to be equities, right? So with that being said, what I would highly recommend a lot of folks do is, number one, I don't hedge. Portfolio discussions are very different than trading discussions. So if we're feeling that the market's getting toppy, the best way to protect yourself is control your size and control where you're engaging the market from. So again, control your size. It's okay to have more in cash, right? To be allocating cash at the top of a trend is just really, generally speaking, a very bad idea. But if we get a slight pullback, now you're controlling from where you're engaging the market. And if you're feeling the market's frothy and you're concerned about a pullback, we want to be opportunistic for that pullback, which means we need some cash. So just allocate less capital at these levels where you can still enjoy the move for as long as it will last, but not engage in the top picking. And that's my opinion. That's the way I've always looked at this. It's just a different approach as compared to, say, momentum trading, which would typically put you in at highs. But if the markets keep moving higher, if you're in a freshly parabolic move, if you're in a fresh short squeeze, if you're in something that's just jumping and you're in early, you'll probably have a chance to continue to see that momentum. But I wouldn't call any of where we're at now, early, right? I think it's pretty well established that we've gone parabolic, and that's a tricky place to engage at the highs. So what's up with the dollar today? Hey there, Tomek, and thank you for the question, gang. I always want to make sure that I'm being as clear, and sometimes I accept it a little blunt, because, gang, the market is a zero-sum game. I'm never going to do you guys any favors by coddling y'all. You guys know this, and I'm just as tough on myself. So I always want to make sure I'm looking at everything as brutally as possible, and I'm thinking about both sides of the argument. I'm thinking about, like a good debate class will teach you, not just to make a really good argument on what you want to argue for, but also think about what's on the other side of the argument. What is your competitor going to argue for? What are both sides of the conversation? So I really want to think, especially when I'm bullish, I want to think about what a bear would be thinking. What edge would they have? Why would someone want to buy something that I'm willing to sell, or vice versa? So those are the conversations always in my head. So what's going on with the dollar today? Take a look at the euro. I believe the ECB's been pretty chatty. What's happening is treasury yields are heading higher. So what's up with the dollar? Treasury yields are up. That's what's up with the dollar. Yeah, thank you for the question. All right, next up is, I got the game stonk. Yeah, I got the game stonk and I got the diamond hands. Absolutely. I love the diamond hands, right? I love that idea. If you believe in a particular narrative, that conviction comes with the research, that, that confidence comes with the research and the understanding of the different catalysts. So, but yeah, I got the game stonk. What's interesting about game stonk is, and stonk is just a silly little thing people call stock sometimes, for those of you sort of not in on the joke. It says power to the people just underneath it. And the idea now that so much of what's happening in the markets is getting democratized, that the playing field is being leveled, the access to information we have, it's a really exciting time to be a trader. It really, really is. It really is. All right. Next up is, Bitcoin hit 50,000. Hey there, grain of salt. Yeah, Bitcoin hit 50,000. Whenever we take a look at BTC, my thing with BTC is, and this is where a lot of people can get hurt by the narrative and talk about a market that's gone parabolic. I liked Bitcoin as a trade. Look, I'm not a hodler. A lot of people just believe Bitcoin's going $1 million and that's that. I could probably make really good arguments for why this is absolute rubbish, as well as I can make an argument for why this is really the future in terms of blockchain. And again, always keep from drinking the Kool-Aid, right? On the bookshelf behind me, I probably got 4 or 5 different books on crypto and blockchain that I read back in 2017 and 18. So my position in Bitcoin dates back to 2016. So am I happy we're going to 50,000? I can't even begin to tell you how amazing it is to watch something that you own. I own Bitcoin from under $1,000. So yeah, believe me, it's pretty cool. But I also want to make sure that I understand what and I've already pulled my initial investment out. I liquidated enough Bitcoin where this is just a free trade, because on one hand, look, I'm hearing India is going to be outlawing Bitcoin. One thing a lot of folks in Texas and other states found out, there's no electricity. You can't use Bitcoin. Well, I say the same thing about debit cards and credit cards, but really interesting what's happening with Bitcoin. It's horrifying how parabolic it has gone. But I'll tell you, if you believe in the narrative, and this is the same thing I've told folks about Bitcoin for 4 years, either you believe in the narrative and you've bought it and you're going to hold it and you get what blockchain is, and that Bitcoin is the reserve currency of this. I call crypto, to make it make sense in my mind to believe it, I call it digital Forex. That's what I call it, digital Forex. Forex, foreign exchange, being the largest market on the planet, right? I call it digital Forex because it makes it feel real, substantial, and sort of legitimate. It adds a degree of credibility in my mind. Bitcoin is the reserve currency of crypto. That's the way I look at it. So yes, there's a lot of talk about Dogecoin, thanks to Elon Musk. But Bitcoin's where I don't have any other altcoins. I mean, to me, this is it. This is it. So with that being said, always keep an argument for both sides of this. And if you believe in Bitcoin, then gang, are we going to pull back like we did like this at some point in the future? Of course we are. So if you liked Bitcoin, you thought, 42.5, then you love it at 32.5. If you believe in the uptrend and you have a way to identify the backbone of the uptrend. Is this going to pull back someday? Yes. It's the same thing when we went to 17,000 and then went to 3,600 or whatever that was. Same thing. If you believe in it, this is a longer term play. This for me is a play that I'll probably have for the next 10 years. When I bought it in 2016, my minimum holding time once I was able to take out my initial investment was 10 years. I don't know if that makes me a hodler, but 10 years to let this whole thing shake out. And if at some point it was garbage, then I didn't risk anything. That was the whole idea. So keep in mind that uptrends pull back, and it hasn't been that long since this thing shed $10,000, $12,000. Could we get a pullback to 40? I would love to see that. And I think if you believe in the narrative, and remember, you can buy fractional pieces of this thing. You don't have to buy a Bitcoin. You can buy a piece of a Bitcoin. If you've got X dollars to invest X risk dollars. That's it. So, are there other narratives into this thing? GBTC is a really popular one. RIOT. Thank you. Yeah, RIOT and Mara. Yeah, they're going to continue to move higher on this 50,000. So I guess what I'm trying to say is I believe in the narrative. I just don't want to be a buyer at 50,000, right? So if I was a believer and I had to still build up a position, then I'll do it on those days. And whether it's this year, this month, next quarter, it will pull back again. Maybe not to where it was, but it likely will pull back again. So don't position yourself at the highs. Not 6 weeks ago, we were down at 32,000. Keep those opportunities in mind, and they will come again. Because if this is a legit healthy uptrend, my mantra is healthy uptrends correct. So just trust that. Just trust that. And let's see. Is there an ET? Yeah, so you can look at some of these symbols we just took a look at, Doug. Yeah. And there's a futures contract, and for sure. Neil's asking, where do I see interest rates going? Neil, where interest rates are going or where the Fed's going to let it? Where interest rates are going or where the Fed is going to have to consider what they own in their assets, the balance sheet, and Wall Street, right? Remember, the Fed serves Wall Street. Let's be real. It's okay. Again, I don't want to get into this where it's insidious and they're against us and that mindset, unhealthy. But what I do want to remember is just know the game that we're playing. And so the Federal Reserve cannot raise rates anytime soon. Remember last time they even started to reduce the asset purchases and talked about maybe incremental interest rates. Remember what Janet Yellen's most glacially paced interest rate 1 quarter a year? That's never happened. So remember the taper tantrum? It just can't happen anytime soon without this movement we're seeing in equities absolutely crumble. And believe me, they're aware of this. They're aware of the bubble they created. They can't say it. Every single bubble that we've ever been in. I don't know. I can't blame the Fed for tulips, right? We can't blame the tulip mania on the Fed, but I'm sure someone Fed-like could be blamed. Every bubble that we've ever been in, gang, has been inflated. They brought the helium, right? And I think they're cognizant of that. So no time soon is my answer on that one. But remember, you'll be able to see the early signs when we see M2 money supply tick down, when we see then that spills over into perhaps a taper of the asset purchases. Nowhere near that right now, though. Nowhere near that as far as I'm concerned. All right, MSTR. Let's take a look at that one. Again, cool. Look, a couple things. MicroStrategy is neat, but again, the best I can do with where it's at would be way up at the 8 exponential moving average, which is an aggressive level from which I could consider a pullback. Pullbacks are good, but look where it's at pre-market. No, I won't touch this one. But I guess the question I always want to ask, and this is rhetorical, but one I hope you guys consider. And that is, when does a stock or a currency or a crypto or an ETF or a futures contract, when does it land on your radar? Because when it lands on your radar, it's going to tell you a lot about the way that you're scanning. So I'll give you a little insight. The way most people scan for opportunities in the markets is momentum based. Kind of like, you guys remember Jurassic Park? And in that one scene, the very first Jurassic Park, not how many other now, 19? The very first Jurassic Park, when they're being stalked by that T-Rex, and he said, don't move, right? If you don't move, he can't see you. We are T-Rexes in this analogy. And when the stock market moves, we take our tiny little arms and go, "Arr!" That's what happens. I know. Do you like that? I'm a hell of an actor, aren't I? So that is my T-Rex impression for you guys. My point is most traders look at the market like T-Rexes. Something moves and it gets their attention. We don't want to be T-Rexes, right? I mean, they were giant and their brains were the size of a Campbell's can of soup. We don't want to be that person. We want to be velociraptors, right, in this analogy. But my point is, when is a stock getting on your radar, right? And this doesn't have to do with MicroStrategy. This could be anything. When is a stock on your radar? Is it when it's moving with green grab candles, double green, and sort of this nice decaffeinated type trend? Or is it only getting on your radar when it's caffeinated? Now, if you're a momentum trader, that's supercharging, that extra energy is required. I don't like to trade that. That's just me. That's just me. I want to catch these things before everybody else, all the T-Rexes out there start to see it, start to see it. That means it can't move a lot. It's going to be in a structure that's bullish, where I think the path of least resistance is higher, but it's not moving a lot. Once it starts moving, all those T-Rexes get to work. I don't want to get mixed up with that, right? So we're velociraptors. Exactly. So I'm being a little facetious, but I'm really not. Ask yourself how and when, what scans are you designing, and how does it direct your attention? If you're looking at momentum scans, then you have to be a momentum trader, and you want to get that momentum discovered as early as possible. So like, for example, and I'm going to wrap it up with this. Facebook is interesting to me. Facebook. I don't think the T-Rex psychology is here yet. I think there's going to be a little bit of energy and possibly a move to the upside. If we're going to organize into an uptrend, this is where momentum could be interesting to me. This is where a breakthrough, a key momentum level in a market that's blue and compact might then open up an opportunity for an early look at that momentum move, not so far into sort of the obvious T-Rex zone. All right, gang. So, you know what? DH, I think that's a really good point. I'm going to click on that there. That's a really good point. One of the neat pullback opportunities is after a 52-week high, because it gets everyone's attention, but then you wait for a pullback. I wait for pullbacks. You mentioned the squeeze. I wait for pullbacks even after a squeeze. My favorite way to trade squeeze is squeeze retreat. In other words, let the squeeze fire and let all the momentum hit the market. And then when it pulls back, like it does probably better than 60% of the time within the first 2 to 3 days post squeeze, you'll have just a small pullback. That's where I like to take advantage of it. So let's let the market sort of tip its hand. We can see its cards, and then I'll engage the market. So I like that a lot. Great point. Especially when we're looking at a explosion out of a non-trending market like Facebook. All right, gang, I'm going to wrap it up here. Time to start our day. Check out my newsletter, free newsletter at countdowntrader.com. We just did a conversation about correlated versus uncorrelated stocks. A lot of what is in my watch list this week that I'll be talking to my sector secrets folks about. I'd say 70% of these stocks are a little less correlated. And we talked about what to do with a market when it's sitting up at the highs that it's sitting up at right now. One of the ways you can protect yourself is trading stocks that are not as correlated to the heavily weighted sectors and the indices in the market. So when we get a pullback, it's not going to be as apt to go with the tide. All right. Have a great one, gang. I'll see you tomorrow. Stay safe, stay warm, and be good to each other, gang. I'll talk with you soon.